Some of the most fascinating stories in business aren't in the big, flashy Super Bowl ads or those glossy press releases. Nope, they're actually hidden in plain sight, buried in these dense, official documents, just waiting for someone to connect the dots. And today, that's exactly what we're going to do.
So let me ask you a question. In a world that is just full of marketing spin and perfectly crafted PR messages, how do you get a company's real, honest opinion of itself? I mean, what does it actually worry about when the cameras are off?
Well, the answer is surprisingly simple, but almost nobody ever does it. You read the one document it's legally forced to file with the government. You read its 10K.
Okay, so what is a 10K? Think of it like a company's annual official report card. It's required by the SEC, and in it, a company has to lay out everything, the good, the bad, and yes, the ugly, for everyone to see. It is the closest thing you will ever get to a corporate truth serum.
For this explainer, we're going to use the 10K to do a kind of corporate checkup. And our patient today, a really fascinating and ambitious company called Sidus Space, a pioneer in the new space economy. We're going to check its vitals, look at its history, and then get its own diagnosis of the risks it's up against.
All right, first things first, in any checkup, we have to understand the anatomy of the business. What does Sidus Space actually do?
Well, in short, they do a lot. Sidus isn't just building satellites. They're building them for all kinds of orbits, from right here above Earth all the way to the moon. Plus, they're developing the brains, the onboard AI that makes these satellites smart. They also manufacture critical hardware for huge clients like NASA. And on top of all that, they manage the missions and sell the data they collect. It's really a full-stack approach to space.
So, how does all that turn into a business? Well, it's a model with a few different angles. They can sell you an entire satellite platform. Or if you don't need a whole one, they'll just rent you some space on theirs for your camera or sensor. They can also just build specific parts for you. And the big one they're focused on now is selling the data and insights their own satellites gather.
Now, here's what makes their approach so different. The traditional space industry it's this huge, complicated web of different suppliers for every little part. Sidus is trying to do the opposite. They're vertically integrated, which means they build almost everything themselves, in-house. The idea is that this gives them more speed, more control, and more flexibility. It's a really bold move.
Okay, so we've got the business plan down. Now let's check the vital signs. How's the company actually doing? The 10K gives us a pretty good look at what they've been up to lately.
And wow, 2025 was a busy year for them. This timeline shows some serious momentum. In March, they got their third satellite into orbit. That's a huge technical win. Then, they massively expanded a key contract for a lunar satellite, which shows their customers have a ton of confidence. And to top it off, they rolled out new AI platforms. These are all really strong, positive signs.
And it's not just that. They've been landing some really impressive deals. I mean, a 10-year contract with an Army depot and getting named an awardee for a massive missile defense program. Listen, when the government and the defense industry start signing on, that is a huge vote of confidence in your technology.
So the company is hitting its milestones, it's winning big contracts. This checkup is going great, right? The patient seems healthy. And then you get to the bottom line of their income statement. A net loss of over $29 million in 1 year.
And here's where the context is absolutely critical. It's not just a big loss, it's a growing loss. This chart makes it pretty clear. Their losses jumped from about $17.5 million in 2024 to almost $30 million in 2025. This is what you call cash burn, and for a young company like this, it is a very, very important vital sign.
And that cash burn brings us to maybe the most interesting part of the entire 10K, the risk factors. This is the diagnosis. This is where the company is legally required to tell you in its own words every single thing that could possibly go wrong. It's brutal, mandatory honesty.
Let's just start with this one. This is the company on the record saying that, because they're so new, even they don't really know what the future holds. That's an incredibly frank admission of uncertainty coming straight from the source. Next up, they tackle those numbers we just saw head on. This isn't some analyst's hot take. This is Sidus and an official government filing confirming those big losses and saying flat out that becoming profitable is not a sure thing.
And this right here is the direct result of those losses. It's the big one. They know they need more cash to operate and grow, but they also have to warn everybody that they might not be able to get it. That's the central drama for so many high-growth, high-risk companies.
And the list of worries doesn't stop there.
I mean, space is a tough, unforgiving business. A rocket could fail. The satellite could get hit by a tiny piece of debris and be destroyed. Their competitors are often way bigger with way deeper pockets. And even with their do-it-yourself model, they still rely on some key suppliers. Any one of these things could be a huge problem.
So after this whole corporate checkup, what's the final prognosis? We've got a company with incredible technology and some real wins under its belt, but it's also facing just enormous fundamental risks. Its future is really, truly in the balance.
This ledger basically sums it all up, doesn't it? On one side, you've got all this promise, their unique business model, those huge government contracts, their proprietary AI tech. But on the other side, you've got the peril, the massive and growing losses, that constant need for cash, fierce competition, and just the insane risks of working in space. For every single strength, there's a giant challenge waiting. And that kind of leaves us with one final, much bigger question. When you really dig into a 10K for a company like this, you realize you're looking at the anatomy of a moonshot. And it makes you wonder, for all the pioneers in this new space race, is this level of extreme existential risk not a bug, but a feature? Is it just the price of admission?